Your credit score, it's one number, but it has a massive impact on your financial future. Whether you're planning to buy a home, get a loan, or even secure a great interest rate, your credit score plays a key role. But what goes into this number, and how can you improve it? Today, I'm breaking down the essentials of managing your credit score so you can take control of your financial health. Let's start with one of the most important habits: paying your bills on time. Did you know that your payment history is one of the biggest factors in determining your credit score? Late or missed payments can have a major negative impact, so set yourself up for success. If possible, automate your payments for regular bills like credit cards or utilities. Most credit card companies also let you set up automatic minimum balance payments, so you'll never miss a due date. Next, let's talk about credit card usage. Maxing out your credit cards isn't just stressful, it can hurt your score too. If you have a big purchase to make, consider alternatives like a lower interest line of credit or a home equity line of credit if you're a homeowner. Keeping your credit card balances low relative to your limits shows lenders that you're using credit responsibly. Now, let's address something that catches a lot of people off guard: unnecessary credit applications. It's tempting to sign up for a new credit card when there's a flashy incentive like cash back or travel points. But opening too many accounts can lower your score. Choose your credit wisely and limit new applications to only what you truly need. Another important step is to keep an eye on your credit profile. Mistakes happen, and so does identity theft. In Canada, you're entitled to one free credit report per year from each major credit bureau, Equifax and TransUnion. I recommend getting reports from both, as they may contain different information. Review your profile to ensure there are no errors or fraudulent charges, and contact the credit bureau if you spot anything suspicious. Now, let's talk about credit utilization. This refers to how much of your available credit you're using. As a rule of thumb, try to keep your balances below 50% of your credit limit, or even better, under 30%. High utilization signals risk to lenders and can lower your score. If you're planning a major financial move like buying a home, talk to your mortgage agent or broker before opening or closing any credit accounts, as this can also affect your profile. What if you have little or no credit history? Limited credit can hurt your ability to get a mortgage or other loans. It's important to have some active credit accounts like a credit card or small loan that you manage responsibly by paying on time and ideally in full each month. This helps build a strong credit profile over time. If you don't have active credit, don't worry. There are options to start building your profile, and we can help you figure out the best approach. Your credit score doesn't have to be a mystery, and improving it doesn't have to be complicated. By paying your bills on time, monitoring your credit profile, and managing your credit utilization, you'll be well on your way to a healthier financial future. Thanks for watching, and don't forget to like this video, subscribe for more financial tips, and share this with someone who's looking to improve their credit score. Let's work together to make your financial dreams a reality.